Good evening. You are watching 999 Financial Crisis. I'm Nakisha, your host today. Tonight, we investigate a giant entity, the issues at hand, working capital. What is working capital? It refers to the short-term financial resources a business uses to sustain daily operations. It is determined by subtracting current liabilities from current assets. It includes the firm's cash, inventory, and account receivables. But why does this matter? The importance is undeniable. Current assets represent a large percentage of a firm's total assets, so they must be managed carefully. Doing so saves valuable time for the management. The objective is simple: to boost profitability by effectively managing payables and receivables. It is also crucial to improve the efficiency of the supply chain, procurement, and production. But for our suspect tonight, the management of this capital looks suspicious. We go live to our field reporter, Alia.
Thank you, Nakisha. Hi, everyone. I'm Alia. I am standing outside the headquarters of the suspect Nestlé. Our background check reveals they are no ordinary suspect. They are the world's largest food and beverage company headquartered in Vevey, Switzerland. Founded in 1866, merged with Henry Nestlé Company in 1905. And now they operate in 188 countries with over 270,000 employees. Portfolio, they own 2,000 plus brands including Nescafe, KitKat, Maggi and Milo. Their mission is to unlock the power of food to enhance quality of life for everyone. However, the financial data submitted on 31st December 2023 raises questions. And now we are back to our host Nakisha.
The forensic unit has dissected the company's financial structure and they found 5 main bodies. The following main bodies are: firstly, temporary current assets, assets that fluctuate over time. These are additional assets like extra cash or inventory that the company builds up only during peak seasons or specific time of high demand. Secondly, permanent current assets, the minimum baseline level of current assets like inventory and receivable that the company must hold at all times to carry out its daily operations regardless of the season. Thirdly, fixed assets, long-term physical or non-physical resources like factories, machinery, and brand value that the company owns to produce its goods. These are not meant to be sold for cash in the short term. Fourthly, equity, the net value of the company that belongs to the shareholders. It represents the money invested by owners, plus any profits kept within the company retained earnings. Fifthly, current liabilities, short-term financial obligations and debts that Nestlé must pay off within 1 year, which is 12 months, such as bills to suppliers or short-term loans. Lastly, long-term liabilities, financial obligations and debts that are not due within the next 12 months. These are payments Nestlé will make over a longer period, such as pension obligations or long-term bonds. We receive a call from reporter Alia. We go live with our field reporter Alia.
The forensic unit has dissected the company's financial structure. Before we go to unit forensic, let's examine what's inside the 5 main body of this company. We found the following component. First, temporary current assets. This include current tax, cash asset, short-term investment and derivative assets. Second, permanent current asset. These are inventory, trade, and other receivable and prepayments. Third, they possesses massive fixed asset, property, plant and equipment, goodwill, intangible assets, investment in associates, financial asset, and deferred tax asset. On the liability side, we found current liabilities, financial debt, derivative liabilities, trade and other payables, accrual provision, and current tax liabilities. We also identify long-term liabilities, discover financial debt, derivative liabilities, employee benefit liabilities, provision, deferred tax liabilities, and other payables. Finally, the equity section revealed share capital, treasury shares, translation reserve, other reserve, retained earnings, and non-controlling interest. To get more information, our cameraman had caught a scene between Unit Forensic, Financial Police, and head of Nestlé. We moved to the interrogation room.
Ma'am Natasha, the forensic unit has run the number. First, the net working capital. The formula is current asset minus current liability. Their assets are RM159,277 minus liability of RM191,420. The result is a negative 32143. Second is the current ratio. The formula is a current asset divided by current liabilities. The result is 0.83 times. This means for every RM1 ringgit of short-term debt, the company is only able to pay 0.83. I have also analyze the working capital approach graph. Look at this chart. The financing structure show they use short-term source to finance not just temporary asset, but also their permanent current asset. Short-term financing bracket cover a large portion the asset. This is made our calculation of the negative net working capital. Thank you.
The forensic data is clear. Your current assets are lower than your current liabilities. This means you are practicing a moderate policy. You intentionally keep your current asset low. Why? Do you know the importance of working capital? 1. It can save time devoted to managing the working capital. 2. Since current assets represent a large percentage of total asset, it is necessary to manage them carefully. But you keep them low. Why take this risk?
Miss Natasha, we are not careless. We keep current asset low because we can operate efficiently without holding large amount of cash or stock. Instead, we need high fixed assets. We need them to support our global manufacturing footprint and maintain product quality, safety, and innovation.
But your approach is an aggressive approach. Your current assets are lower than your current liabilities. This creates a higher risk of default and may lead to cash flow problems.
Correct, it is aggressive, but look at our objective. We want to boost profitability by effectively managing payable and receivable. We aim to improve supply chain, procurement, and production operation efficiency. High risk, yes, but high return.
So, is Nestle guilty of financial negligence? The investigation concludes Nestle operates with a negative net working capital and a current ratio below 1. This is not a sign of failure, but a strategic choice. It shows Nestle has immense power over suppliers, paying them later and sells inventory very quickly. Case closed. Nestle is found to be aggressively successful. I am Nona Shakira in Marrakesh. Remember, the numbers never lie. This is 999. Thank you.